Hey everyone, welcome back to Terry's Diverse Horizons. Today we'll be talking about Shopify versus Nvidia. Which one is your best bet, or perhaps even both for a long-term investment? So let's get started and hear these two investment gurus talk us through it.
All right. So, you ready to dive into this whole billionaire stock shuffle?
Yeah, definitely.
Yeah.
It's pretty interesting what's going on with Nvidia and Shopify, right?
Yeah. These billionaires pulling back from Nvidia, it really makes you wonder what they're seeing
Hmm.
that maybe we're all missing, right? We're
Yeah,
talking Nvidia, the AI chip powerhouse.
right.
They've been absolutely crushing it. I mean,
For sure.
122.4% revenue surge last quarter,
Wow.
bringing in a staggering $96.31 billion.
Yeah, that brilliant.
Billion with a B.
It's mind-boggling, isn't it?
Ah.
It definitely makes you scratch your head a bit when you see these investors pulling back,
Right.
especially when you look at their profit margins, 55% net margin,
Yeah.
62% operating margin. Those are numbers most companies can only dream of.
Exactly. So what gives? Why are these savvy investors who usually have their fingers on the pulse of the market
Right.
taking profits with Nvidia near its 52-week high? And what's the story with Shopify? That's got them so excited. That's exactly what we're going to unpack in this deep dive.
Yeah, let's get into it.
Mm-hmm.
So starting with Nvidia,
Okay.
yes, they're riding high on the AI wave.
Mm-hmm.
Their recent performance has been nothing short of phenomenal.
For sure.
But here's the thing. Their stock price already reflects that success.
Okay.
Trailing PE of 57, forward PE of 33.78, price to sales of 31.71.
Whoa.
All those numbers.
Those are high.
Pretty high, yeah. And they basically mean that a lot of future growth is already baked into that current stock price.
So these billionaires like Steve Cohen and George Soros,
Yeah.
they're thinking, hey, if things don't go perfectly according to plan,
Right?
Nvidia's stock could plateau,
Uh-huh.
even dip, time to take some chips off the table.
Exactly. When a company's valuation gets that high, even a slight hiccup in their growth trajectory can spook investors and send that stock tumbling.
Makes sense.
It's like a high wire act.
Oh, yeah.
Impressive, but with a lot of potential for things to go wrong.
And that brings us to Shopify. Now, their growth might not seem as dramatic as Nvidia's at first glance,
Right.
but they're consistently expanding with a 26.1% year-over-year revenue increase,
Yeah.
reaching $8.21 billion in the trailing 12 months. And
Okay.
let's not forget their impressive profitability, a 16.8% net income margin and a 15.8% operating margin.
Strong numbers.
Plus, they've got $4.9 billion in cash on hand and manageable debt.
Yeah, they're in a good spot.
It's like they're playing the long game, building a solid foundation for sustainable growth.
That's what's so fascinating about Shopify. They're not just riding the coattails of a single trend like AI.
Right.
They're tapping into a fundamental shift in how we do business,
Okay.
the rise of e-commerce.
Got it.
And they're doing it in a way that's incredibly smart and scalable.
Interesting.
They're not just providing a platform.
Mm-hmm.
They're building an entire ecosystem that empowers businesses of all sizes to thrive online.
Wow.
Think about it. Their business model is based on recurring revenue from subscriptions and transaction fees. That means as more businesses join their platform and sales increase,
Yeah.
Shopify's revenue grows steadily and predictably.
Okay, now that's interesting. It's almost like Shopify is a bet on the future of commerce itself,
Right.
not just a single company or technology.
Exactly.
And that's something these billionaire investors are clearly picking up on. They're looking beyond the hype, seeing the long-term potential of e-commerce, and Shopify is perfectly positioned to capitalize on that.
You're spot on. And that's why, even though Shopify's valuation isn't exactly low,
Whoa.
a forward PE of 75.1 times and a price to sales of 17.53.
Okay.
Investors like Cathie Wood, known for her bets on disruptive innovation,
Right.
are buying in. They see the potential for Shopify to become a dominant force in the e-commerce landscape.
All right, so we've got these two companies, both successful in their own right,
Definitely.
but with very different stories.
For sure.
Nvidia, the high-flying AI chip maker with a potentially precarious valuation.
Yep.
And Shopify, the steady e-commerce enabler with a compelling long-term growth story. So how did these two stack up against each other? And what does this shift in billionaire investment strategy really tell us?
Well, that's $1 million question, isn't it?
Yeah, let's
Let's dig into that
dig into
a
that.
little bit more.
Okay.
So what's really interesting here is this concept of cyclical versus secular trends.
Okay.
Nvidia as dominant as they are
Yeah.
tied to those cyclical trends in tech spending.
Mm-hmm.
Think of it like a tide.
Okay.
It comes in. Corporations invest heavily in new infrastructure.
Mm-hmm.
Nvidia rides that wave.
Mm-hmm.
But inevitably, the tide goes out.
Right.
Spending slows down.
Yeah.
Growth can become choppy.
Ah,
Yeah.
okay. So it's like they're at the mercy of these corporate spending cycles,
Right.
which can be unpredictable and volatile.
Exactly.
And that makes investors a little jittery, especially when the stock is already priced for perfection.
Yeah, it is not. Now, contrast that with Shopify. They're riding a secular trend,
Yeah.
the unstoppable rise of e-commerce. Think of it like a steady current,
Okay.
constantly flowing in one direction.
Got it.
People are shifting their shopping habits online, and that trend is only going to accelerate.
I see. So even if there's a downturn in the economy,
Right.
people are still going to buy stuff online.
Mm-hmm.
Maybe not as much, but the underlying need is still there.
For sure.
That makes Shopify a more stable bet, even if their growth isn't as flashy as Nvidia's.
Yeah.
It's like the tortoise versus the hare.
Exactly. And when you factor in the broader market context,
Yeah.
this preference for sustainable growth makes even more sense.
Yeah.
We're in a period of economic uncertainty,
For sure.
with inflation concerns, rising interest rates, geopolitical tensions.
Yeah.
Investors are looking for safe havens,
Right.
companies that can weather the storm and continue to deliver consistent returns.
And that's where Shopify's strong financial position comes into play.
Yeah,
$4.9 billion in cash manageable debt. A consistently profitable business model. That makes them a very attractive option in a volatile market.
absolutely. Let's not forget their stock performance.
True.
Shopify has seen its share price climb by over 52% in the past year, and their market cap has more than doubled from $95.21 billion to over $203 billion.
Wow.
That's a pretty clear signal that the market believes in their long-term growth story.
But what about those high valuation ratios? You mentioned that Shopify's forward PE is still pretty high, even though it's lower than Nvidia's.
Right.
Doesn't that make it risky too?
That's a valid point. Shopify's valuation is not cheap by any means.
Okay.
But remember, valuation is always relative.
Right.
We need to compare it to the company's growth potential and their position in the market.
Okay, I'm starting to see the bigger picture here. These billionaires aren't just chasing the next hot trend. They're making strategic bets on companies that are well-positioned to thrive in the long term.
Mm-hmm.
Companies like Shopify.
And I think there's another layer to this.
Okay.
They're investing in companies that empower others.
So-
Shopify isn't just about selling products.
Right.
It's about giving small and medium businesses the tools they need to compete in a digital world.
Right. They're democratizing e-commerce, and that's a powerful story to tell.
Absolutely.
It's almost like they're investing in the future of entrepreneurship itself.
That's a great way to put it.
Yeah.
And I think that resonates with a lot of investors, especially those who believe in the power of innovation and disruption.
Okay, so we've talked a lot about Shopify's strengths, but every company has its challenges.
Sure.
What are some of the potential risks or headwinds that Shopify might face?
Well, one key challenge for any platform company is competition.
Right.
The e-commerce space is crowded,
Yeah.
and Shopify faces competition from giants like Amazon and smaller niche players.
So they need to constantly innovate and stay ahead of the curve.
Exactly. They need to keep adding new features and services to attract and retain merchants. Another potential risk is the reliance on small and medium businesses.
How so?
Well, these businesses can be more vulnerable to economic downturns. If there's a recession, for example, many small businesses might be forced to close their doors, which would impact Shopify's revenue.
So even though they're riding this secular trend of e-commerce,
Right.
they're not completely immune to economic cycles,
Well,
right?
But here's the thing.
Yeah.
Shopify's platform is incredibly versatile. They're not just catering to small businesses.
Yeah.
They're also working with large enterprises and expanding into new areas like social commerce and augmented reality.
So they're diversifying their revenue streams and broadening their reach.
Exactly.
That's smart. It's like hedging their bets, right?
Precisely. And they're also investing heavily in international expansion.
Oh, wow.
They're targeting emerging markets where e-commerce adoption is still in its early stages.
Interesting.
That presents a massive growth opportunity.
Okay. So even though there are risks,
Mhm.
Shopify seems to be well equipped to navigate them.
I think so.
They've got a strong leadership team, a solid track record of innovation, and a vision for the future of commerce that goes beyond just selling products.
I agree. And that's what makes them so appealing to investors who are looking for companies that can deliver sustainable growth over the long term.
Now, this whole shift towards sustainable growth,
Yeah,
Is it specific to the tech sector?
that's a good question.
Or are we seeing this trend play out in other industries as well?
That's a really interesting question.
Yeah.
And I think it's something we should delve into further.
It's fascinating to see this focus on sustainable growth kind of permeating different sectors. It's like investors are realizing that true value
Mm-hmm.
isn't just about explosive short-term gains.
Right.
It's about building companies that can thrive for decades.
Absolutely.
Mm.
We're seeing this shift play out in industries like renewable energy,
Oh, yeah.
sustainable agriculture, even consumer goods,
Makes sense.
where companies are prioritizing ethical sourcing and eco-friendly practices.
It's like sustainability is becoming a key ingredient in the recipe for long-term success.
Yeah.
Consumers are demanding it, investors are rewarding it, and companies are realizing it's not just good for the planet, it's good for business too.
It's almost like we're witnessing a paradigm shift,
Wow.
a fundamental change in how we view value creation.
Okay.
And this shift is being driven by a convergence of factors.
Yeah.
Climate change,
Mhm.
social awareness,
Right.
technological advancement,
Yeah.
and a growing understanding that our current economic model
Right.
is unsustainable.
So, from your perspective, what are some of the key characteristics of companies that are truly embracing sustainable growth? What sets them apart?
That's a great question. I say first and foremost,
Yeah.
it's about having a long-term vision,
Okay.
a commitment to creating value not just for shareholders,
Mm-hmm.
but for all stakeholders,
Mm.
like employees, customers, communities,
Okay.
and the environment.
So it's not just about profits, it's about purpose. It's
Right.
about building a business that's aligned with a broader set of values.
Exactly. And that purpose needs to be embedded in the company's DNA. It can't just be a marketing slogan.
Yeah.
It has to be reflected in their operations, their products, and their culture.
It's like walking the talk, right?
Yeah.
They have to actually live their values,
Yeah.
not just talk about them.
Precisely. Another key characteristic is transparency.
Okay.
Companies that are serious about sustainability are open about their practices, their challenges, and their goals.
Interesting.
They're willing to be held accountable and to engage in meaningful dialogue with their stakeholders.
They're not afraid to show their work, so to speak.
Exactly.
They're confident in their approach and they want the world to see it.
And finally, I'd say it's about innovation.
Okay.
Companies that are embracing sustainable growth are constantly looking for new and better ways to do things. They're investing in research and development, exploring new technologies, and pushing the boundaries of what's possible.
It's about being proactive, not reactive.
Right.
They're not just trying to keep up with the times, they're trying to shape the future.
And I think that's what makes this whole trend so exciting. It's not just about mitigating negative impacts.
Right.
It's about creating positive change, about building a better future for all.
It's about realizing that sustainability isn't just a constraint, it's an opportunity. It's a chance to innovate, to differentiate, and to build a business that's not just successful, but meaningful.
Beautifully said. And I think that's a powerful message to leave our listeners with.
Yeah.
As you explore investment opportunities, look beyond the hype and the short-term gains. Seek out companies that are committed to sustainable growth, companies that are building a better future for us all.
It's about recognizing that investing isn't just about making money, it's about making a difference. It's about aligning your capital with your values and supporting companies that are creating a world we can all be proud of. Thanks for joining us on this deep dive, and we'll catch you.